Welcome back to Prime Worth. Today we're answering a big question. How do businesses actually make money? It's not just about selling things, it's about understanding how revenue, costs, and profit work together. Once you understand this flow, you'll see why some businesses thrive and others struggle. Let's break it down in the simplest, most practical way possible. Every business, big or small, runs on one main goal: to make a profit. Profit is the reward for solving a problem efficiently, but before we get there, you must understand the two key financial pillars: revenue and costs. These decide whether your business survives or fails. So what exactly do they mean and how do they connect? Let's start with revenue. Revenue is the total money your business earns from sales. If you sell 100 products at $20 each, your revenue is $2,000. Simple math, but not the full story. That's just the top line. The real question is how much of that you actually get to keep after expenses. That's where costs and profit come in. Costs are what you spend to keep your business running. It includes everything: materials, packaging, advertising, rent, internet bills, and even your own time. Many new entrepreneurs focus only on sales and ignore costs. But real success comes from mastering the balance between what you earn and what you spend. Let's say you made $2,000 in revenue, but your costs were $1,400. That leaves you with $600. That's your profit. If your costs are higher than revenue, you're running at a loss. It doesn't matter how good your product looks, if numbers don't add up, your business won't last. Profit keeps your dream alive. Profit isn't just money left over, it's the oxygen of your business. It funds growth, pays salaries, and gives you freedom. Without profit, you can't reinvest, expand, or survive tough times. That's why understanding your numbers is just as important as having a great product or marketing plan. There are three main types of profit: gross, operating, and net profit. Each tells a different story about how healthy your business is. Think of them like layers of a cake. The deeper you go, the more realistic the picture becomes. Let's quickly break them down so you can understand your own numbers. Gross profit is your revenue minus the direct cost of making or buying your product. Example, you sell a $20 t-shirt that costs $10 to make. Your gross profit is $10. This shows how efficiently you produce or buy goods, but it doesn't include rent, ads, or other business expenses yet. Operating profit takes it a step further. Now we subtract all running costs: rent, utilities, marketing, salaries. If you made $10,000 in gross profit but spent $4,000 on operations, your operating profit is $6,000. This shows how well you manage daily business activities. Finally comes net profit, the most important one. It's what's left after every single cost, including taxes, interest, and unexpected expenses. It's your true take-home income. If your revenue is $20,000 and all expenses total $17,000, your net profit is $3,000. That's the number investors and entrepreneurs really look at. Now, how do businesses increase profit? Simple, they either raise revenue or lower costs, but smart entrepreneurs focus on both. You can sell more, charge more, or produce cheaper, but each has trade-offs. Let's look at how successful brands balance these strategies. Take Apple, for example. They don't sell cheap phones, but their pricing creates massive profit margins. They focus on brand value and innovation instead of discounts. Their costs stay similar to competitors, but revenue per product is much higher. That's profit strategy through premium branding. Now look at Walmart, the opposite model. They make smaller profit margins per sale, but sell in huge volumes. Millions of customers daily bring consistent revenue. They control costs tightly through supply chain efficiency. Different approach, same goal: maximize profit. So which approach is right for you? If you're new, focus on managing costs first. Don't chase big sales until your foundation is strong. Every dollar saved adds to profit. Once you understand your costs, then you can scale your revenue confidently without losing control. One big mistake new entrepreneurs make is ignoring hidden costs. Delivery fees, taxes, payment platform charges, and even time spent handling customer service all count. If you don't track them, you'll wonder why your money disappears. Always measure, always know your true numbers. Let's do a real example. You sell 50 mugs at $10 each. Revenue is $500. It costs $5 per mug to make, so $250 to make the mug. Packaging and ads cost another $100. That leaves you with $150 profit. You might feel rich at first, but now you see the reality. Tracking every expense helps you plan smarter. Businesses also look at profit margin, which shows how much profit you make for every dollar earned. Formula: if you make $150 profit on $500 revenue, your margin is 30%. High margins mean efficiency, while low margins signal room for improvement. Profit margins vary by industry. Restaurants might have 10%, software companies up to 70%. That's why comparing your numbers to similar businesses matters. Don't panic if your margin is lower than a tech giant. Focus on improvement, not comparison. Another concept to know is cash flow. Even profitable businesses can fail if they run out of cash. Cash flow is the movement of money in and out of your business. You might have $10,000 profit on paper, but zero cash if your clients haven't paid yet. Always monitor your bank flow. Healthy cash flow means you can pay bills, invest, and sleep peacefully. To maintain it, keep some buffer money, invoice clients early, and manage inventory wisely. Many businesses die not because they're unprofitable, but because they're broke when bills arrive. Let's connect this to your future business. When you plan your product or service, calculate both cost and expected selling price early. Don't guess, research materials, ads, and delivery. Even small miscalculations can destroy your profit margin later. Here's a mindset shift. Revenue shows vanity, but profit shows sanity. Big sales look impressive, but sustainable profit builds wealth. It's better to make $3,000 profit from $6,000 sales than zero profit from $20,000. Always prioritize quality profits over quantity sales. Many entrepreneurs forget their own time is a cost. If you spend 10 hours making $100, you're earning $10 an hour. Not impressive. When pricing your product or service, include your effort. If your time isn't valued, your business will feel like a job instead of freedom. Taxes are another factor many ignore. In most countries, businesses pay taxes on profit, not revenue. So plan early, set aside a percentage for tax, track receipts, and stay compliant. Smart tax planning can save thousands of dollars every year and keep your business safe. To increase profit, think efficiency. Automate tasks, use software, or outsource repetitive work. Every saved hour or reduced cost increases margin. Remember, businesses grow not by doing more work, but by doing smarter work. Also focus on customer retention. Getting a new customer costs 5x more than keeping an existing one. Loyal customers buy again, refer others, and raise revenue without extra marketing. Profit grows naturally when you serve well and build trust. Reinvest your profit wisely. Don't rush to buy luxuries or show off success. Use it to upgrade systems, learn new skills, or scale marketing. That's how small businesses become global brands, by growing their value, not their expenses. Keep your business financially transparent. Track everything: revenue, costs, cash flow, taxes. Tools like QuickBooks or simple Excel sheets can help. Financial awareness is power. You can't improve what you don't measure. Let's recap. Businesses make money by managing the flow between revenue, costs, and profit. Profit is not luck, it's planning. Whether you sell products, services, or digital goods, understanding this cycle makes you a smarter entrepreneur. Thanks for watching Prime Worth. Now you understand how businesses truly make money. In the next video, we'll dive into how to find profitable business ideas. Don't forget to like, share, and subscribe, because your journey to business freedom is just getting started.